Energy shock. 1.65% plunge. A $51 billion wipeout hit the S&P/ASX 200 as regional war risks intensified. Brent crude spiked to $112 per barrel after strikes on Middle Eastern energy infrastructure. Prices are now 55% higher over the last 30 days due to the closure of the Strait of Hormuz. Treasurer Chalmers warns inflation may exceed 5% if supply disruptions continue. This inflation threat accelerated the RBA's tightening path, squeezing the financial sector. CBA shares dipped as analysts warned of a potential 42% valuation plunge to $101.50. Mining slump. The RBA raised the cash rate to 4.1% on Tuesday, increasing repayment pressure on households. This marks the second rate hike in 2026 to fight resurgent price growth. Morgan Stanley expects GDP growth to slow to 1.6% as high rates dampen loan demand. While banks faced rate pressure, the materials sector buckled under geopolitical and trade stress. The materials index dove 4.833% as BHP and Rio Tinto shed over 2% each. Selling grew as China diverted iron ore imports into storage rather than active steel production. The index remains down 2.45% year-to-date, despite 3 years of positive returns through 2025. Labor shifts. IG analyst Tony Sycamore sees stormy conditions ahead until the Middle East conflict resolves. A different pattern emerged in the labor market, offering a complex signal to policymakers. Australia's unemployment rate rose to 4.3% in February, despite the addition of 49,000 jobs. A surge in the participation rate to 66.9% outpaced the growth in new employment. This 0.2 percentage point jump surprised economists who expected a steady 4.1% rate. Rising joblessness may eventually cool wages, though May rate hike fears persist.